Hello. How are you? Welcome back to Life Trials by EAC. How are you guys? I hope everybody's doing amazing on this beautiful, lovely Wednesday afternoon here on the east coast of Florida. It is 2:50 p.m. and it is April 6th of 2022. So thank you again for tuning in to my brand new series called Insurance with EAC. On today's episode, I would like to discuss the different types of insurance policies that are out there in today's market and how you can determine the best options for you and your family by understanding the cost indexes that are utilized to determine the premium prices, which is extremely important, for each given individual and their circumstances and the things that they need when they are doing their shopping and understanding what type of policies that will best fit them and their needs. So let's just jump right into it, right? So what are the different types of life insurance policies? So let's start with the very first one that's very basic. It's called term policy, which is obviously temporary for a fixated period of time. Term insurance provides the greatest amount of coverage for a limited period of time. It provides a death protection, which only pays a death benefit in the event that the insured dies during the policy term. It is the cheapest type of insurance. It does not have any cash value itself. It's always cheaper than a whole life policy with the same face amount, which is very important and very favorable. Can't even say that word right now. It is something that people look to most frequently, as a product that they can utilize for their specific needs. And all term insurance has a final termination date, and term is renewable and convertible. So that's very important. Some examples of term life policies, just looking at one of the carriers that I contract with called AMERCO. They're awesome. So as I had mentioned, these different products are for a specified need for a specified period of time. One example would be some of their amazing products are included in their mortgage protection series, which is a mortgage protection plan, which this is something that is for a fixated period of time that provides that type of protection in the event of a death, terminal illness, or an accidental death. This specific policy will then pay off the mortgage or assist in some capacity to covering those issues, so then the individual does not have to worry, or the beneficiaries don't have to worry about what will happen to their life, their home, and everything that they've invested into. It's also utilized as a income replacement, where in the event of some type of terminal illness or a disability, will then in turn be considered almost like paying the death benefit as the insured is still living. So these are really good options and products that a lot of people look to for their specific needs. So looking at the next type of insurance policy, something called whole life, which is considered a cash value insurance policy. So what is whole life? Whole life insurance provides death benefits for the entire life of the insured. It also provides living benefits in the form of cash values. It matures at age 100 and normally has a leveled premium. It also provides both living and death benefits. We also hear a lot about permanent life insurance protection, that is what you would consider a whole life policy, which is permanent for the rest of your life. And it's for their entire life until the day that they drop dead. It lets the living benefits such as cash value and policy loans to be utilized during the time that the individual is still living. There are several types of whole life policies, which it all depends on with respects to looking at the differences with the whole life policies that you look at and who the carrier is and who's providing that specific product. But it's all based on how the insurance is paid. So some will be straight paid until death or age 100. Some are paid for after a few years or by a specified age. Just depends on the arrangements that are made between the insured and the insurer. Some may give you a little discount in the early years to help you get started. So some examples of whole life policies. Again, we'll look at AMERCO, great company, great carrier. They have a policy called Advantage Whole Life Protection, which is included in their final expense portfolio that covers funeral and burial expenses. Another one of their whole life policies is called Eagle Premier, which is also called Eagle Guarantee. And there's just so many different carriers that provide so many different valuable products with respects to both term and whole life that I mean, I could be here forever just laying those out to you, but just to kind of give you an overview of what they are. So the next type of insurance policy that you are able to acquire in your amazing little life. So universal life insurance policies allow its policy owners to determine the amount and their frequency of premium payments and to adjust the policy face amount. And this is also considered a cash value insurance policy. So these are definitely policies that are utilized by people in their working age. And what's good about these policies is that you have the ability to adjust the policy face amount up or down to reflect the changes in any financial needs that you may have throughout your life. The policy specifies the percentage of each premium that goes towards the insurance production and that which is used to build the cash value. So it is pretty much nature itself to get started with these policies, where you can then look to and just start in a more natural sense where you're just paying into the policy itself with the premium payments, and for a whole life policy according to the set schedule. So it's just more done in the beginning as a natural caused cycle where you just typically pay the premiums in the beginning of these policies. So universal life is also considered a whole life policy as well, just to not kind of get you guys confused, but it's all based on setting this scheduled period in such payments. So a variation of whole life insurance characterized by considerable flexibility, where changes are made easily by policy owner with such flexible premium payments. There is a great investment gain that goes towards the cash value of the policy, where universal life allows its policy owners to determine the amount and the frequency of premium payments, which will adjust, as I had mentioned a few times already, the policy face amount. So you just have an enormous amount of flexibility with these specific policies. So the whole, just regular whole life policies, they do have flexibility, but not when it comes to the premium payments. Universal life does allow for you to have that ability to have that flexibility with respects to being able to decide when you want to make these premium payments, which is extremely important to some clients. They have an enormous amount of flexible benefits, no minimum death benefits, and there is a big cash value withdrawals that you are allowed to utilize as what would be considered living benefits, like loan policy advancements. So that allows for you to have the ability to, just simply take out money whenever it is needed. And if you ever have an emergency, or let's just say you have a child who needs to get their wisdom teeth removed, or you just need something to cover an emergency expense that you don't want to take out of a savings account, out of, stock investments, a lot of people will look to these specific policies that they've invested for X amount of time. And in that case, they have the ability to then just take out and just pay almost a penalty charge in order to utilize their money, because this is your money that you are investing. And this is overall, I would say, to sum up what life insurance really is about. It's about a life investment. So with respects to some examples of universal life policies, there are a lot of different carriers that provide different types of products. Foresters, for instance, they provide a Smart UL, which is a flexible premium universal life product that offers solid cash accumulation for ages 0 to 85, available on a non-medical or medical underwriting basis. So it is very, very good. And the ability to have that flexibility is extremely, extremely important to some clients. And the last type of insurance that you can acquire is called indexed universal life policies. So these are also permanent life insurance policies, allowing policyholders to tie accumulation values to a stock market index like the S&P 500. Index universal life insurance policies typically contain a minimum guaranteed fixed interest rate component along with the index account option. This gives the policyholders the security of a fixed universal life insurance with the growth potential of a variable policy linked to indexed returns. It puts potential extra interest based on the investment of that given carrier's general account. So one of the good things about these policies is that it allows for people to have the same thing, the ability to have a flexible premium product that offers solid cash accumulation for ages 0 to 85. So this is also looking at just another product offered by Foresters, which is called the Smart UL 2021. And then the one that I had mentioned before is a Z Smart UL 2018. These are the years that these products were released. So they are extremely beneficial to clients that don't want to just make investments in the stock market or just based on currency value. So you can also make investments into policies, life insurance policies. So this is something that, at least in my generation, a lot of people are not very well versed or very well informed in such, I guess, in the arena of financial investments, where a lot of people just consider cryptocurrency, stock market assets, and real estate, when in reality you do have this fourth aspect of financial investment called life insurance policies, which are extremely beneficial in today's volatile market, I must say. So just kind of jumping into the next segment, which is how you can determine the cost and how the cost index are used to determine the cost of any given policy that is, I guess, inquired about. So in order to compare the cost of policies, you need to look at the premiums, the cash values, and the dividends. Cost index uses one or more of these factors to give you a convenient way to compare relative costs of similar policies. When you compare cost, and any adjustments made must be taken into account that the money is paid and received at different times. These indexes take care of that arithmetic for you. So one of the cost index that are utilized is called Life Insurance Surrender Cost Index, which is useful if you consider the level of the cash value to be of primary importance to you. It helps you compare costs if at some future point in time, such as in 10 or 20 years, you decide to surrender the policy and take its cash value. So another cost index that is utilized is called the Life Insurance Net Payment Cost Index, which is useful if your main concern is the benefits that are to be paid at your death and if the level of cash value is of secondary importance to you. So if the death benefits are more important to you versus accumulating any type of dividends within that given policy, this is something that determines the premium price of that given policy. So it helps you compare the cost at some future point in time, such as 10 or 20 years, if you continue paying premiums on your policy and do not take its cash value. And the last one is called the Equivalent Level Annual Dividend Cost Index, where it shows the part how the dividends play a determining role in the cost index of a participating policy. So this is just based on the dividends itself of that given policy. This is more about indexed universal life policies. So by adding a policy's equivalent level annual dividend to its cost index, it allows for you to compare total cost of similar policies before deducting such dividends. So I know that was definitely a handful, that's for sure. And I know that there is just so much to life insurance in of itself, but just really looking at it from my perspective, I kind of wanted to give a very straightforward, informative session on just the different types of life insurance policies and how you can determine the cost of such given policies. So I really appreciate you guys taking the time to just listen to this episode on these different policies. And if you have any questions or inquiries about life insurance in the state of Florida, please feel free to contact me. All my information will be in the description box below. And please feel free to contact me at any time with your questions, concerns. I love talking about life insurance, and I think it's extremely important that we inform the general public about these investments that a lot of people just really overlook because it's not, I guess, like popular. I guess cryptocurrency is like more popular, but when you look at the long-term accumulation of such value of such investments, one of the only ones that stand firm and guaranteed are life insurance policies. So if you enjoyed this episode, please like, share, and subscribe to my YouTube channel, Life Trials by EAC, with my new series called Life Insurance with EAC. Thank you so much, guys, and I hope you guys tune into my next episode. Bye. Bye.